My guest today is Jason Denny. Jason is the CEO and founder at Credbull, a fully integrated and transparent DeFi credit platform. We'll learn all about this today. Welcome to the show, Jason.
Thank you for having me, Andy. It's a pleasure.
Pleasure to have you here, Jason. Let's do what we do at the beginning of the show. It would be great if you could please introduce yourself. Love to hear some of your personal and professional backstory. What have you been doing in the lead up to founding Credbull?
Sure, happy to. So for the last 6 years, I've been full-time in the crypto space. I think I've aged about 30 years of that. But prior to that, I started my career in TradFi. I was 17 years in TradFi. I graduated from Harvard Business School in the late 90s and ended up joining McKinsey, the management consulting firm out of Toronto, New York office, because I had no idea what I wanted to do with my life. And then after a few years, decided to get a real job and went into banking. Joined a client of mine. This is one of the large banks out of Toronto. I was 10 years in banking, mostly in asset management. I cut my teeth in active asset management. We did the full rotation in private banking, corporate debt, product structuring, and then I finished off the rotation in insurance. Shortly after that, became global head of strategy for the top 10 insurance and asset management company, top 10 globally. I worked with the board and CEO. This is shortly after the financial crisis, where I spent a lot of time in Asia. Fell in love with Hong Kong and ended up moving to Hong Kong in 2015. And shortly after became CEO of another insurance and asset management company. So I kind of cut my teeth in debt, corporate debt, lending, asset management, and risk. And then I discovered crypto in 2015 during the height of the bull market and ICO craze at that time, and haven't looked back since. And it's been an interesting ride for the last 6 years.
Got it. Fantastic. Thank you, Jason. Yeah, I mean, it certainly has been an interesting and fascinating ride, as you've said, over the last 5, 6, 7 years, and it doesn't look like that is going to slow down. If anything, things seem to be speeding up. So let's start to talk about Credbull, though, Jason. This is partly about DeFi and credit. So it's a lot about tokenization, real world assets, and I know you've got some spicy opinions on all of this stuff. So we'll dive in. I guess from the top though, just tell us a little bit about what Credbull is, maybe the origin story if you like, but at a high level, what it is you're trying to do with Credbull.
So Credbull is a combination of the 17 years in TradFi and the last 6, 7 years in crypto. It really combines the best of both worlds. We, like to say we're Web 2.5. When I was in TradFi, I was primarily focused on high-end consumers, high-end institutional and credit investors. And we built products for them that are premium products that were not accessible to the broader retail market. And that bothered me. When I discovered crypto for me is the single largest redistribution of wealth of our generation. And, having been exposed to DeFi and the power and the principles of DeFi, Credbull is a combination of both. So what Credbull is we are an on-chain private credit asset manager. So what does that mean? We are an asset allocator of capital to the biggest fintechs, SME originators in emerging markets who lend to credit-worthy SMEs. We generate a very high yield based on risk-adjusted yields that allows us to offer both institutional and retail investors, same terms, high fixed and variable risk-adjusted yields. The fund is a licensed fund and caters to institutional investors. And the DeFi entity provides access to the fund at the same terms and features for institutional investors. So there's an equal playing field across both segments. So it combines our technical financial expertise with our passion for access to the broader market.
Got it. And who are you building this for then, Jason? Who are the different types of investors that you think will be best suited to use your services here?
Yeah, it's, our mission is to accelerate and elevate financial freedom for all. So it's really for everyone. The value proposition that we bring to both institutional and retail investors is premium products, institutional grade level products for everybody, but also how we are different from the kind of what is now considered traditional tokenized funds is that we are also a decentralized, on-chain, transparent fund, which means that, so as private credit has been criticized in the past for being opaque asset class, high performing but opaque, we take the veil off of how we manage capital, which means that all capital allocation on-chain and off-chain is fully transparent, immutable data on-chain and visible to investor dashboard of all activity of all capital allocation. So there's zero gap between the stated strategy and risk controls and how we actually execute our strategy. So investors can see that in real time, as well as the performance of the fund in real time. And that's the differentiator between what Wall Street is doing, the likes of BlackRock and Fidelity, and what we're doing, which adheres also to the principles of DeFi around transparency and access.
And when you talk about these, different DeFi strategies, stable fixed returns backed by real world assets, talk to us a little bit, Jason, about what those assets look like. What is the kind of the breakdown of the real world assets?
Yeah, no, happy to. So as I mentioned, we provide, think of it kind of as balance sheet liquidity to SME originators. These are the most established fintechs who lend to SMEs. Now, when we allocate capital by originator, we do it by product as well. So these products include, invoice factoring financing, working capital, revenue-based financing, term loans. And these products are offered to credit-worthy SMEs. So the originators underwrite the SMEs. Our risk is that risk management is that we do a rigorous risk assessment of the SME, of the originators, and we have full visibility in real time of all SME transactions as well. But these are a combination of securitized and unsecuritized lending products, and we cap the risk that we take through allocation capital structures around senior, mezzanine, and unit tranches. So it's managed like a typical asset management fund on-chain with full visibility of capital allocation off-chain, back on-chain.
Got it. And I know I said at the start of the show, Jason, that you had some spicy opinions on, tokenization, right? And whether everything has the potential to be tokenized, but whether that, should play out in the real world. I think you've also talked about, the shortfalls of too much centralization around tokenizing different assets and how that can lead to problems. So look, I know it's a big subject, but yeah, anyway, you want to just kind of jump in and explain your thinking on tokenization and where we are and where we're heading and what we should look out for.
Yeah, no, happy to. So, everything can be tokenized. And there's a lot of people out there that say everything should be. I'm not one of those people. I don't think that just because an asset can be tokenized and the technology has been proven, that it should. And I'll share with you kind of a catchy principle that I use to evaluate whether a token should be or an asset should be tokenized. And I call this the petals principle. Okay. So petals principle has to solve for the following. The P has to solve for a problem. What is the problem it's looking to solve? Right? Does it have commercial viability? Does it have sustainable growth potential? It has to solve something, right? And right now we're seeing glimpses of speculative RWA tokens that doesn't really solve anything, doesn't have inherent value. So first is you have to solve a problem. Second is efficiency. By tokenizing an asset, it needs to bring some level of efficiency across the investment cycle. That case has been proven time and time again. Third is transparency. Right? As I mentioned earlier, a lot of the tokenized funds by Wall Street, the likes of BlackRock, they're tokenized, but they're still very centralized. There's nothing decentralized about a tokenized fund that's being launched by those guys. So it has to provide transparency in terms of the capital allocation and the capital movement, right? A lot of the tokenized assets are not providing greater access to the retail. For example, they're still highly exclusive, right? Goldman Sachs recently announced the launch of multiple products that are tokenized, offered to their exclusive client base. And the same goes to BlackRock. You have to have a minimum of 100,000 to invest in their fund and so forth. So access is important. The next is liquidity. Does it drive broader liquidity, either secondary or primary markets, or you can get leverage on it? Liquidity is an important factor, especially for asset classes that are highly illiquid, right? Such as private credit, such as private equity. And the last one is the option to have self-custody, have ownership of that claim token that you receive when you lend or invest in an RWS or tokenized asset. So this petals principle is, the benchmark or the framework that I use to evaluate what a token or an asset should be tokenized. And I would say only a fraction of assets today that are tokenized meet that criteria. So I'm not in favor of tokenizing all assets. We're in the early kind of experimental stage. My concern is that if we move down that path of tokenizing assets, because we get excited about it, and there's marketplaces like I have, like from tokenizing baseball cards to Pokemon cards to anything that you can think of, like weather patterns. My concern is that we're going to create a speculative bubble. And you're going to have a lot of retail investors who are not educated on the underlying risk. And that's going to prevent us from growing the Web3 liquidity, because to do that, we have to expand into Web2 and attract fresh new capital in. So we've seen this play out multiple times in previous asset classes, where we become literally we stand in our own way of growing the space because of multiple bad actors. And I don't want to see that happening to RWA. RWA is not a fad, it's a long-term play. So that's my concern. It has to be controlled. It has to adhere to these principles, however you define your principles, but it has to add value to the community.
Yeah, that's very well said, Jason. And, I saw that, I think Masari said as of April, so a few months ago, the total value locked of real world asset protocols was something like 8 billion, which is, not an insignificant amount of capital, but it's a drop in the ocean in terms of, wider financial markets. So it does show that, we're just really at the very early beginnings of this trend. It's kind of a double-edged sword, though, isn't it, Jason? Because, it's fine to want to be wary of, I guess, retail investors being caught out by a speculative bubble. But at the same time, tokenization is all about democratizing access to, wider forms of investment. You've got to let those people have access. And unfortunately, sometimes, it's just kind of how new asset classes work. Sometimes there can be a kind of rise, a series of bubbles, and then, the froth kind of burns off. But some of that capital, some of those investors, they do stay, and it kind of, the cycle begins again, to put it simply, Jason.
Yeah. Look, I agree, Andy. It is a double-edged sword. So Let me make a couple of comments on the 8 billion number. I'm sorry. So yes, it's 8 billion if you were to exclude stablecoins. Stablecoins is the first use case in RWA. There's 100 billion plus 120 today. So you have to take that into consideration. That is a tokenized asset, a stablecoin. So that's first. And the 8 billion and including, let's say, the stablecoins, that's on public chains. There's 1.5 trillion traded on private chains. And that has been reported a number of times in the media that we don't kind of account for that. And those folks have, and that's by, TradFi, those are by, big institutions. They have no interest in accounting for that on DeFi land. Okay. I'm a big fan of providing greater access. One of the core principles at Credbull is to provide greater access. We accelerate financial freedom for all. But we got to do it in a way that provides full transparency and education to the underlying risk and the potential for returns. The issue that we've had in DeFi, and we've seen this in the last bear market, is that people were investing in these high yields and they had no idea about the layers of risk, that it was not visible to them. And what's happened is that what happened back in the bull market and the bear market, it was, with the fall of, whether it be Luna or FTX, we discovered there's massive systemic risk behind those two. And it was a house of cards that crippled, where a lot of people lost their life savings. So I'm all for access. That's the core principle of why we build Credbull. But we got to do it in a measured way that provides the right education, the right tools to make educated decisions. So, there's, when you look at kind of the NFT bubble burst, NFTs are struggling to come back. DeFi bubble burst. So for us, the big growth market, Andy, is to bring in fresh new capital. That's how we grow that 8% if you cut it through that lens. Whether it be BCG or McKinsey or every consulting firm, everyone is saying the potential is 10 trillion plus, right? We're not going to get there by creating a bubble. We're going to get there by growth, high growth, yes, but in the right way. So access, doing it the right way is the right approach. And we are a long-term play, as I mentioned earlier, not a fad.
Yep. Look, very well articulated. Hard to argue with any of that, Jason. And I think to get there, part of the answer to this, of course, is regulation, right? And again, I hate to say it, use the same phrase again, but again, it's a double-edged sword because, in theory, permissionless blockchain protocols and regulations, are the antithesis to each other. But, in the real world, there are regulations are needed to kind of just grease the wheels between different financial jurisdictions, if you like. And there are ways to make that work even in the world of decentralized finance. And I think, this is the logical way forward. But how do you guys at Credbull kind of think about, I suppose, the regulation problem and the differing jurisdictions and their approaches to this?
Yeah. So look, whenever somebody asks me to choose between A and B, I always end up choosing C. Right? It's not a black and white answer. There is no doubt that there is a lot of work to be done to build greater regulatory harmony across the major markets, okay? Particularly in the US, which is by far the largest capital markets in the world by a multiple factor. So there's a lot of work to be done there. And it's actually the signs have been quite promising over the last few months. The House and Congress have held hearing to learn about it. The SEC, while they've lagged other markets, have signaled that they want to cooperate in a sandbox approach with the Bank of England, and so on and so forth, right? And Trump, at the rally just yesterday, he said, day one, I'm just going to fire Gary Gensler, right? Look, there's movement to be there, right? And we're going to resolve the issue between the SEC and the CFTC. That's U.S. moves slow. And it moves fast if there's political will. And we're seeing that there's political will. So having said that, there's work to be done. Now, there are a lot of other markets that are way more advanced to the SEC and in the US in general. So it depends on where you play, right? There's the security tokenization of an asset, and there's DeFi side of things as well. That is a permissionless lending model where you can be creative in a fully compliant regulatory way and providing access to retail in a permissionless way through the traditional as in the last few years, DeFi lending model that has been blessed by regulatory bodies, largely in Europe and other markets. So yes, there's work to be done, particularly in the US, but we have a lot of opportunities today to do it in a compliant way and give broader access to the market. So I choose C. It's not an either or. I always say, do not let perfection get in the way of better. Just because we don't have a perfect system today, doesn't mean we can't chip away at it and get better. So that's my approach, and that's how we're actually building an entire business around it, with full regulatory sign-off, lawyers, everything. But there's quite a bit of opportunity to be captured today.
Yeah, look, I don't doubt that, Jason. And you referenced Trump's speech yesterday or the day before at the Bitcoin 2024 Nashville conference. And look, as you said at the beginning of the show, Jason, it's been a long and wild ride since the 2017 ICO bubble days, right? Crypto has come an incredibly long way. Back in 2017, it would have been strange to think that, an ex-president would be speaking at a Bitcoin conference and suggesting that perhaps it was time for the US to start seriously putting together a strategic reserve of Bitcoin. And yet here we are, just, in 2024, not that far later. So incredible times. I guess what I'm wondering, Jason, is, if things are starting to move quickly there, and look, Trump might not come to power. We don't know that. We don't know the Democrat position on crypto. It hasn't been super friendly with the likes of Gensler. But what do you your old buddies, I guess, in the traditional finance system? You characterized yourself as Web 2.5, which I think is the right way to frame it. Do you think the rest of the industry is starting to open up finally to what is possible with tokenization? And obviously the likes of BlackRock leading the charge. I guess the eyes are now open and people are seeing that this is the way forward.
So, I've always held the view that politicians, and this is a well-established fact, don't support any position unless it benefits them, unless it helps them to gain power and stay in power. So if you connect the dots over the last few years, what's happened is that Bitcoin has proven itself, despite the short-term volatility, to be an asset of value that people are holding over the long term. And we've seen governments worldwide who've been building up their reserve and holding this asset. We've seen giants like Larry Fink, CEO of BlackRock, initially dismissing Bitcoin to now saying it's going to be bigger than gold and having launched spot ETF in Bitcoin. So the tide is changing along with tens and tens of million Bitcoin holders and separate. So there's been a kind of a TradFi movement and a bottom-up movement from Web3 that has started to influence politicians and have a very loud microphone on a national scale that, aspiring politicians to be president or Congress or otherwise are starting to pay close attention to this issue, that crypto is not going away, Bitcoin is not going away, and this intrinsic value of holding Bitcoin in terms of an asset of value that has influencing the position, whether it be Trump and the Republican Party, and also the Democrat. Democrats have come out and saying, "Oh, we want to reset, right? We want to reset our relationship with the crypto community." So I have my political views on who I hope would win. That I prefer not to share here, so not to be political. But look, I'm very optimistic. Our thesis is that, again, this is a long-term play. There's a lot of smart people are saying, both from TradFi and from Web3, that this is going to be it's going to grow to be bigger than gold, right? Bitcoin. So there's movement, and the dam is about to break. You chip away at it long enough, it's going to crack, and it will break soon.
Yeah, couldn't agree more. All right, well, look, as we start to finish up this part of the podcast, Jason, again, just make the case for what you guys are doing with Credbull, and explain who is the kind of entity, organization, SME that should come and take a look at your platform and the different options that are available, and what they should do, where they should go.
So we provide non-correlated to the crypto market, high risk-adjusted yield that provide diversification to someone's portfolio to hedge against the market, the volatility of the market, multiple tenors to meet the investor kind of liquidity needs. Everything that we do is fully transparent to provide the investor full confidence in the deployment of the capital. Our products are by far the most competitive in terms of high fixed yields, high variable yields on a risk-adjusted basis, and matters delivered to the investor in a seamless way, whether it's the institutional investor or the retail investor through the DeFi lending model that provides long-term wealth creation. And that's our kind of strategy. Is we're not going to go after the 60% flash in the pants high yields. We're going to give you consistent high risk-adjusted yields that will create long-term wealth creation. That's our position, and we've had tremendous success to date over the last 3 months since we've launched.
And the website, folks, is simply credbull.io, but of course a link is in the show notes. All right, well, thank you, Jason. I think what we do now is we start to finish off the podcast, and we do that by running you through the very famous crypto conversation hot take round. Are you ready?
Ready.
All right. I'm just going to run some questions at you, Jason. What I want you to do is just give me your honest answers, hot take style, if you like, but no right or wrong way to do it. Question one for you. Let's see what you have to say. It is, where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Fully in favor.
All right. What would you say then, Jason, is your firmest conviction crypto opinion?
Ooh, firmest conviction crypto opinion. Biggest redistribution of wealth creation of our generation, providing broader access globally to every human being on the planet.
I love it. All right. Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10 years. And blockchain is a very long time. Whatever you like, Jason, Credbull, DeFi, Web3, what does it all look like in 10 years' time?
We want to dominate. And I love that quote. I read it before, and it's true. We tend to, as founders, as an executive team, we want to go out the gate fast. But, I would say this is a long-term play. And us as Credbull, we want to be the dominant on-chain private credit asset manager, providing the best of high fixed yield, high variable yield to our investors. Again, accelerate, financial freedom, not security, financial freedom for all. And there's an important distinction between the two. But in 10 years, the industry is going to look very different. It's $100 trillion asset class, the actively managed asset class. Big opportunity. It's a big, bad blue ocean out there that we want to bring into Web3. Even if we capture a small amount of that, Andy, it's a big opportunity.
Yes, indeed. All right. Well, William Gibson, sci-fi author, he said, of course, that the future is already here. It's just not evenly distributed. With that in mind, Jason, can you think of an example of the future being here right now, but most people aren't aware of it?
Ooh, uh, I would say it's the intersection of blockchain and AI. There's a lot of really good work being done there to provide very smart solutions, processing massive amount of data per millisecond that will kind of create better products in real time to investors. And I think, the world belongs to those that operate. I always operate at the center. And today, that center that we're going to see dominate in the future is very smart data processing at the AI level and leveraging blockchain infrastructure for decentralization and transparency to hold accountability.
Yes, indeed. Very well said. Okay, it brings us to our final question, Jason, which is, what is your favorite science fiction book, film, or TV show?
Oh, God. I'm not a big science fiction fan. To be honest with you, Star Wars would probably be up there. The kind of that to me, I mean, if you consider Dune is science fiction, that blew me away, both films recently. I loved those films. But I tend to, I've been married for 12 years and, my wife doesn't like science fiction, so I'm limited in my viewer, options. But Star Wars probably, because I grew up on the series, for sure.
Yeah, I mean, you can't go wrong with Star Wars. I also grew up on Star Wars, of course. But yeah, Dune, the two recent Dune films, incredible stuff. Yeah, particularly the second one, I think that's got to be one of the best films, best kind of movie theater experiences of the last 10 years. I think just incredible on the big screen. Yeah.
I agree.
Jason, this was a lot of fun. Thank you so much for coming on the show and spending some time with us. Close it out just again by, telling people where you like to hang out online. Do you have a Twitter profile? What is it? And again, make the case for Credbull and why people should go and check out what you guys are building.
Look, all I say is that go on Twitter, X, and join at Credbull DeFi. We have incredible products being launched, starting with tomorrow, that targets the retail segment. We're launching a full end-to-end gamified platform that rewards users for active engagement, and users can earn over 30% with our product yield as well as token rewards. And we're launching that in stages for the retail community, and it's super exciting. So follow us on at Credbull DeFi, and you're going to see a lot of fun products being launched that we're super excited about.
Awesome. And that website again, folks, credbull.io. Link is in the show notes. Thank you so much, Jason. All the best, and bye for now.
Thank you, Andy. Appreciate it. Take care.